Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled soon, and that will have an effect on global markets. The Fed's policy setting Federal Open Market Committee does not like to move right in the middle of a global financial storm, Bullard said in an interview on the sidelines of a global central bankers conference here. Another camp is signalling that there is little reason to rush and appears to prefer to hold off and determine if there is a fallout from market volatility, a slowing Chinese economy and the devaluation of the yuan on August the 11th. Fed officials' next meeting, September 16-17. We've got a little over 2 weeks before we have to make a decision, and we've got time to wait and see the incoming data, Fischer said. Financial markets have all but shut the door to a Federal Reserve rate hike in September, following a rout in stocks, currencies and commodities this past week. But economy watchers are only now warming up to the idea, in public at least. UniCredit and Crédit Agricole on Thursday become the latest major forecasters to change their September call, following Barclays' move earlier this week to delay predictions for the first US rate hike in nearly a decade by 6 months to March 2016. By all accounts, the slow but steady trickle of forecast revisions is set to repeat what happened earlier this year, when the consensus for a hike in the Fed funds target rate in Reuters polls shifted to September from June. St. Louis Fed President James Bullard on Friday said the Federal Reserve is not likely to change its outlook based on market turbulence. "I won't deny it is a volatile period. It is a volatile period," he told Bloomberg Television. But the key question for the committee is how much you want to change the outlook based on volatility we've seen in the last 10 days. And I think the answer to that is going to be not very much, he said. Bullard, who's been pressing for rate hikes, also said China is unlikely to export deflation to the US. Bullard is not a voter this year. Federal Reserve officials who are most anxious to hike interest rates said on Friday that continued turmoil in financial markets may cause the central bank to delay tightening monetary policy beyond next month, even though the US economy remains strong. St. Louis Fed President James Bullard told Reuters he still favors hiking rates at the Fed's next policy-setting meeting in mid-September, though he added that his colleagues would be hesitant to do so if global markets were volatile at that time. Loretta Mester, head of the Cleveland Fed and another so-called hawk who sometimes runs against the grain at the central bank, said the US economy could still handle a modest rate hike, though she did not commit to backing a move at the September 16-17 meeting.